As an executive, Paul Little led a management buyout of Toll Holdings and grew it from an 18-truck operation to a transport and logistics empire worth almost $4 billion.
These days, the rich lister and former AFL president of Essendon invests privately in property and infrastructure. But his latest focus is in startups, as backer of new seed funder Skalata.
Paul Little spoke to me from Melbourne, and I asked him first what attracted him to the space.
Well, it's been a transition for me. At Toll, we're involved in a lot of companies coming to us with ideas and concepts, and some of which were exciting, some of which we let pass by. But I then got involved with Melbourne University, and we were looking at a board level, again, startup companies that were looking for direction and help. More recently, we, through the Little Group, have had a fairly constant flow of people into the office, again looking for mentoring and ideas and feedback, and that's really culminated now in the Skalata business.
And what are you trying to do with Skalata?
Well, Scalado is it's a unique group in many ways. We've got a collection of very high-profile individuals on our board. We've got some wonderful partnerships with the leading universities here in Victoria. And we're looking to take people essentially with great ideas and help them to commercialise those ideas. So our involvement is pre-venture capital, and it's starting at a very sort of early stage. And that area typically is an area that's fraught with danger, and we think we could add real value there.
We're hearing that funding for Australian startups has gone down by 2/3 in a year. Why do you think seed funding has shrunk so much?
Yeah, that's a very good question. Look, I think if you go back a couple of years ago, there was a lot of interest in startup companies and people wanting to invest in them. However, it is fraught with danger from an investment point of view too, in that to be able to try and create an awareness and an investable sort of level of comfort around a company that's not earning income invariably right at the outset, that doesn't have a lot of reputation, and really it's a concept more than anything else. So we take that raw company and hone up their skills to the point where Skalata add a lot of value around through the mentoring and getting them ready to produce their balance sheets and have revenue flowing through. So we remove a lot of the risk that may have been there a couple of years ago when startup funding was something that was, I guess, a lot more popular. So the startup funding, I think, as a fund now, we'll have 10 companies going through our first fund. We're asking people or inviting people to invest in 10 companies rather than just one, and companies have been through quite a rigorous process.
And what sort of companies are you looking at? What's your criteria?
Well, the criteria is very high. I mean, in our first intake, we had 78 applicants. We've chosen 10, effectively the best of the best. And those 10 now have got a wide variety of industries that they're involved in.
Interesting, you've got one startup in the Formula One space, and of course you're the new chair of Australia's Formula One now, aren't you?
Yeah, that's right. And this particular one is a very interesting one. Is a young couple who bought some technology from the Williams Formula One team. They've been able to use that technology to create what could be best described as sort of a driving aid that they want to take now off the racetrack and put into the schools. So this simulation that the platform they've got will allow them now to teach people, anyone that wants to learn, but in particular school children, well before they get on the road.
And who actually funds Skalata, Paul?
The Skalata funding is made up of, it's a three-phase funding. There's funding coming from the government, which is by way of Launch Vic. That's $3 million over 3 years. There's a philanthropic contribution of $3 million. And then the corporate sector, we're seeking to raise $3 million. So the budget for Skalata over 3 years is $9 million. And that's effectively what we use to run the Skalata business.
I also see that industry funds like Host Plus and First State Super are dipping their toes in the venture capital funding space. A lot of money there. Are you hopeful?
Well, it's a really interesting question, isn't it? And hopefully the answer is yes, they will be more than just interested. I think clearly in a superannuation situation, the members have all got to agree and approve whatever happens within a superannuation fund. But I've had some very preliminary discussions, and it would seem that for a very small component of the turnover of superannuation funds, they can make a very major difference to this startup area. And it's one that I think there will be interest in. There appears to be. It's too early to go the early crow on it, but I think the super funds, if they get involved, it would be great for the whole ecosystem.
Paul, seed funding for startups is down, but there's still a lot of talk about startups. I'm wondering, are we too obsessed with startups when you think about the investment that could be going into upskilling and the innovation in existing manufacturing? Because isn't that where the real productivity gains are going to be made?
Look, I think innovation, there's quite a clear correlation between innovation and job creation. So with job creation, not only do you have a benefit for existing companies and enhanced productivity levels. I mean, I experienced that at Toll. There's no question. When you can compete on service level and not price, you've got something very special. But innovation also creates jobs. I mean, there's 40% of new jobs created by companies that are less than 5 years old. So I think there's a really strong story there for supporting further innovation because of the impact it'll have on the economy and because of the impact it will have on the creation of new jobs.
And you've got one other startup you're backing, which is not part of Skalata, it's a personal investment. Why are you backing Kinoxis, which is a business looking at dealing with drug addiction?
Yeah, well, it's only a relatively small investment, but the important thing for me was that in the area of drug rehabilitation and also working with people that have had or suffered some sort of drug-related problem, drugs of addiction, when we were at Toll, we had a very strong campaign going to employ people that were coming out of a drug problem phase of their lives. And I was very proud of that, and I think it worked incredibly well. This particular drug now that we're talking about has the potential to block the brain's desire for a form of drug and for a number of forms of drugs. So I can't go through I don't know the technical side of it, but all I can say is philosophically, I love the thought of having a drug that can block dependence for drugs, and I'm very happy to invest in that sort of a startup.
And I guess if you do find a solution, it's a solution to a very big problem in the US with dependency on drugs like OxyContin.
Well, that's right. And being an Australian company, I think it's something we can be very proud of. We're not there yet, but the early signs are looking very encouraging.
Paul Little, very interesting to get your insights into this space. Thank you very much.
It's a pleasure. Thank you.